Hey traders, welcome back to the channel. Today I'm going to be talking about something related to trader funding companies, which I get a lot of questions about this, and it's regarding the payout buffer. You may have read on companies that you need to clear a certain profit threshold in order to be able to ask for a withdrawal or a payout. And so that's what's commonly called the buffer. And we're going to talk about this, and I'm going to go over the rules for various companies, which I'm going to go over in the video. And just to mention quickly, these companies, there is discount codes in the video description using code PABT, and the links are down there. My funded futures, Apex, TradeDay, TakeProfitTrader. These are the main four companies that I've been using recently, and you can get the maximum discounts available through the links in the description, again using PABT. So what is considered a buffer for trader funding payouts? A buffer is the amount of profit needed above the trailing drawdown in your account in order to request a payout. All companies will have some kind of buffer or minimum balance required. Usually it would equal the size of your drawdown in your account based on the size you are using. The purpose of this buffer is to promote account longevity by leaving some margin of loss in your account after you take out a payment, because obviously if you have a certain balance in your account and you take a payout, you're taking out equity from your account, so you're getting your balance closer to your minimum balance threshold. Okay, so that's why the buffer serves that purpose of leaving you a little bit of breathing room between your balance and the liquidation price. Now again, these funding companies, unless you're already in like a live setting environment, or if you're using a live futures account with real money, that works pretty much like almost like a bank checking account. If I have $5,000 with Edge Clear or Stage 5, which is like let's say the futures brokers that I mainly use, if you have a $5,000 account and you make a $500 profit in a week, you can take out that whole $500, or you can take whatever amount of money you want from your account. But when you're trading with these companies, you usually need to follow a process and have a minimum balance threshold. Once you pass the evaluation and you get into the funded stage, which most of the time you're going to start off in a simulated funded environment, and until you prove regular consistency in that, then some companies might move you into a real live account setting where your orders actually go into the exchange. But mainly we're talking about the first stage of sim funded accounts. So here's like an example of what that will look like. It's going to vary a little bit, obviously, by companies depending what size drawdown they allow you. But in general, let's say if we take a $50,000 account, you will usually get a $2,000 end of day drawdown with, let's say, like my funded futures or TradeDay. If it's with Apex, is going to be a trailing drawdown of $2,500. But as we know, end of day drawdown is usually preferable. And then that means that your liquidation will be at $48,000. And again, we're talking this is already in a funded environment. Then let's say on the first day, you had a good day and you make $1,000. And now your balance is $51,000. Your max drawdown or liquidation is going to trail it $1,000 up as well. Then let's say on day two, you make $1,500 more in profits, so you finish off the day with $52,500 in balance, and that means that now your maximum drawdown of liquidation is going to be locked in. The way this lock-in works, and this is a pretty standard rule for most or all companies, but again, I recommend you read up on all their frequently asked questions and guides. You can also check out the funding guide playlists on my channel. There's a link in the description where I go over in great detail all the rules in my funded futures, Apex, TradeDay, TakeProfitTrader, etc. Okay, so once your maximum drawdown reaches your initial account balance, is going to be locked into place. So that means that your account can keep growing and growing, and the liquidation is just going to stay at this base level at the size of your initial account balance. Okay, and then the buffer zone, which again is equal to the trailing drawdown. So in this case, it was a $2,000 trading drawdown. Once the buffer zone is passed, now you can start taking profits, but you cannot go obviously below the original account balance, because like I said, now it is locked in as your liquidation price where your account started. So let's just read some examples of the companies that I mentioned, and you can do this for any company. Just go into their frequently asked questions or their help center and just look for the threshold requirements in order to take payouts. So my funded futures, this is from their website. Buffer zone and withdrawal threshold refer to the same concept, often known as drawdown. Are there restrictions on withdrawing profits above the buffer zone? This is for their expert accounts. No restrictions apply above the buffer zone. So expert accounts every 14 days, first 10,000 is all yours, and then afterwards a 90-10 split. So buffer zone clarity. During buffer zone building phase, you can withdraw up to 60% of profits with the standard split. Thresholds will be locked at $0 automatically if any withdrawals occurs during buffer zone phase. So that means that your trailing drawdown is going to lock in at the original account balance. The minimum withdrawal rule of $1,000 applies for my funded futures. Once you withdraw, your buffer zone resets to zero, and any remaining drawdown is lost. Okay, so that's why it's not smart to take profits too early, because you want to build that buffer. What that means is, if let's say you have not reached, if you've only made 51,000, let's say you make $1,000 in profits, 1,000. Your drawdown is 49,000. If you request a payout at this stage, they're automatically going to bump your maximum drawdown to the original account balance. So that means you've now cut your buffer by a lot by taking profits too early. So like with my funded futures, you want to build up a good enough buffer that you can take profits and not cut your risk too much. With Apex, there is a guide, a minimum threshold you need to have in order to make a request for a payout. So let's say for the 50,000, it would be a 52,600 balance. And once you reach this balance, this is when your trailing drawdown is going to be locked as well. So that means that at this stage, your trailing drawdown is going to be locked at $50,100, because remember, it's a $2,500 trailing drawdown for the 50K on Apex. So it says here, you are not required to leave a safety net amount in the account. Okay, unlike other companies, unless your account is on a probation status, blah, blah, blah. For example, on a $50,000 account, you would only be able to request withdrawals on the amounts over 52,600. So you are required to have this buffer threshold in order to be taken out profits. Okay, so you need to be above this thresholds that they ask when it comes to Apex. Okay. And then your balance again cannot go below 50,100 because this is where it's going to be locked. Okay. Let's go into the next company, TradeDay. How often can I withdraw profits? Okay, so you can take out profits, you can request daily. You cannot make a withdrawal until you have cleared the buffer. A trader can draw down into the buffer once they have cleared it. Minimum payout 250. So you can withdraw profits whenever you like. There's no restrictions on the frequency of withdrawals for TradeDay. However, you cannot take a withdrawal until your trailing maximum drawdown has moved to the original account balance, okay? So this is what we're talking about. This is when it's going to be locked. Once you lock in that end of day trailing drawdown, now you are above what is considered the buffer, and now you can start taking profits. Okay, so let's say on a 50,000 account, you start at 50,000, trailing max drawdown 2,000. So you need to hit that $52,000 mark in order for your end of day drawdown to be locked in, and you can start taking out profits as you want. But just remember, you got to plan out and be smart about how you take profits, because you don't want to bring down your balance too low, because remember, now your liquidation is frozen at $50,000. So the more you take out, the closer you're going to get to that liquidation. So you always want to just keep a little bit of distance between your withdrawal balance and what your liquidation is. And TakeProfitTrader, in the pro accounts, 80-20 split, you can take withdrawals from day one. Okay, you can withdraw profits at 80% once you reach the level of maximum drawdown, which we refer to as the buffer zone. So just like TradeDay, once your account, your maximum drawdown reaches your initial account balance, you can start taking profits at the 80% split. Okay, so if you have a $50,000 account, you have a $2,000 maximum drawdown. So once your account reaches 52,000, your drawdown locks in, and then we recommend that you keep the $2,000 buffer until you close the account, which would then be paid to you. But again, we recommend, because this is a measure of just keeping the longevity of your account, because you want to be always try to keep above the buffer zone so you don't bring in your balance too close to your liquidation. They do have this clause: a trader can withdraw profits inside the buffer zone. However, this action can be performed only once the account has been terminated. Okay, and here's the rules. If you take profits inside the buffer zones and you have the account for less than 60 days, you get 50%. Over 60 days, you get 80%, okay? And that's pretty much the rules. So again, I hope this has given you some clarity when it comes to what a payout buffer is. Again, in general, it refers to the maximum drawdown amount, and it refers to once you get your SIM funded account, you're going to bring your balance up to where your maximum drawdown is going to stop trailing your account, and that is going to have built up your buffer, and your buffer is going to be that safety net, that difference in balance between your liquidation price and your current account balance. Okay, that's pretty much it for the video. Again, make sure to check out the video description below to get the maximum available discount on the best funding companies out there. Make sure to subscribe, and I'll see you all in the next video.